Alrighty. Hi, and welcome to this week's edition of Maqro Minutes. I'm your head of trading, Mark Gardner. Start with the disclosure as per usual. The information which is summarised in this webinar does not constitute financial advice or professional advice. It is general in nature and does not take into account your specific circumstances and should not be acted upon without full understanding of your current situation and future goals. All right, stocks in our universe. This week we've got James Hardie, ALS, which is ALS is the code, ALQ is the company name, which is very confusing sometimes, and CIMIC, CIM. We'll start off here with James Hardie. Now, the global building materials company and manufacturer of fibre cement products, they had a dividend, ordinary dividends to be reinstated in the first half of 2022 with a special dividend of 70 cents US, which is roughly about 90 cents Aussie, unfranked, paid to CUFS holders on the 30th of April 2021. So fourth quarter 21 record results. The global net sales, adjusted EBIT, and then NPAT were up 20%, 43%, and 44% versus the previous period, respectively. Financial year 2022 guidance. Approximately 545 million, which is about a 19% increase over financial year 21. Operating results driven by a higher average net sales price, lower SG&A expenses as a percentage of sales, and lean manufacturing savings across all geographic locations. They had an investor presentation day. The residential market growth expected in the US with a new adjusted EBIT long term. Targets expanded growth by about 5% over the upper limit. And there's a new lower limit as well. At prior targets for each geographic location. Their strategy for the next financial year is the expansion into the North American repair and remodel market, new product releases and a shift from low value to high value products, continued lean manufacturing initiative to further expand their margins. The outlook is incremental increases expected in over financial year 2021 in COGS inflation, incremental SG&A and R&D investment, and NA segment is expected to experience a volume growth of about 6 to 8% and price growth of about 4 to 6%. Obviously, as well, the rise in lumber prices and general commodities and input costs recently have reportedly made the average house cost increased by about $25,000 per home. Lumber has peeled back off its super hot highs, but rises in copper prices and things for wiring and all that sort of stuff. So look, there is a small risk in terms of input costs, but generally they're half the time they'll be passed on to the consumer anyway. So but that may slow down growth. But home sale numbers in the US and were slightly below expectation this week, but still absolutely pumping over there at the moment. So that I think that US operation has traditionally not been. It's had a bit of a rocky road, but I think they're starting to get their act together there. So, right, next we'll move on to CIMIC Group. It's a project development company providing construction, mining, and operation maintenance services to the infrastructure industry. Operations in 20 countries throughout Asia Pacific, Europe, North and South America. So their results overall range, group revenue, ex-joint venture and associates revenue declined 7.5%. On the same basis, EBITDA margins increased by 17.6% compared to the last period. However, this result is less than impressive than they seem, as revenue from the joint venture associates declined 11% versus the previous period. Work in hand contracts declined in core segments by 6.3% in construction, 1.1% in investments, offset by an increase of 11.3% in its services, which makes sense as a general rule across the board as we start to reopen in the global economy. So acquisition, CIM has bid 24 cents per share to buy Brazil Farming's 20.5% stake into the Divine Group, a residential property group. Current offer is 100% premium to the last close price of 12 cents per share, however significantly lower from previous bids. of 75 cents per share in 2015. This will boost CIM's existing 59.1 stake in Divine. Brazil Farming is expected to accept it, unless, of course, a better bid comes along. Obviously, given that they've got an existing stake, it's a bit of a double-edged sword there with paying up for things. Obviously, it would help their valuation, but you don't want to be paying too much of a premium. Brazil is starting to come out of their pretty harsh COVID period. Things are starting to heat up again there, so this would probably be a pretty decent strategic move overall, but it may take some time. The outlook: numerous stimulus packages announced in operating countries and construction services will present additional opportunities. Financial year 21 NPAT guidance of approximately 415 million, which is about 12% versus the 372 from financial year 2020. Rightio, next up we've got ALQ, which, as I said, the stock ticker code is ALS, which is rather annoying sometimes. Now, this was a good story. It was a current rec for the investing department. We hit target price on this one, just 4 cents shy. So we called most people who were holding it as it took towards that target price. Towards the end of the day, because the stock was up about 14%, and we have seen a lot of these stocks do that and then pull back the following day. So the advisory team did a good job there, because I think it did fall away about 40 cents the next day. So just go back there a bit. So the advisory team did a good job there. As it did fall back to about $12 the next day. It did hit 52-week highs. Those not familiar with it, it's a Brisbane-based provider of professional technical services in primary areas of testing, measurement, inspection in environmental, food, pharmaceutical, mining exploration, commodity certification, and equipment maintenance. So yeah, they're going to benefit from the mining boom, etc. But also with these higher commodity prices at the moment, going to get a lot more testing from upstart mines, etc. So it's not a bad space to be in at all. Their results were overall very good, beating NPAT, forecasting NPAT and EBITDA by small margins, while meeting and missing forecasts and statutory revenue and EBIT by 1.1%. NPAT was the most impressive, with the 35% increase over financial year 2020, while EBITDA was down 10.3% year on year. They announced a 14.6 cent per share dividend, up from 6 cents, 70% franked, missing forecast by 20%. But the dividend yield in this thing's like 1.3%. It's not a dividend stock. So obviously that's what the market reaction I think it was up about 7 or 8% in the morning on the open, and then gradually ground higher over the day, which is usually super positive. Usually you'll sort of see overreaction to the upside and then a pull back. So I think that's fairly constructive technically, and it just goes to show that obviously even though they missed in dividends, that if people aren't buying it for the dividend stock, but people aren't buying it for dividends, then it doesn't really matter. These are all sort of things that you should be taking into consideration when making your investment decisions across the board, really. Knowing where the expectations lie within these reporting results, just as a piece of general advice there. So COVID-19 subsidies in all countries to be returned. About 23 million across Canada and Australia. The outlook: commodities division experienced strong improvement with mining activity driven by the major miners. Expected to continue into early financial year 2022 due to positive commodity cycle. Geochemistry operations in a build year to increase capacity into next financial year. Industrial division expected to continue experiencing delays and reduced scope of projects. But overall, I would say that they're in a pretty good space. So, all right, moving on now to stocks to watch out for. We've got AM7, TOR, and ALL. We'll start with ALL. Look, we had results come out for the gambling and gaming giant. significant growth in digital revenues, up nearly 30%, nearly offsetting the decline in the gaming division due to COVID impacts in North America. Revenues down 1%, EBITDA up 6% over the period, and in line with guidance provided on the 17th of May. However, NPAT dived 73.5 from 1.3 billion to 346 million. Dividend. Despite low revenues, Aristocrat declared a 15-cent per share dividend, fully franked, with a record date of the 31st of May, which is obviously Monday, and a payment date of the 2nd of July. Outlook. With the rising consumer sentiment and increasing venue patronage, AWL is set to recover in its gaming division and further grow its market share in the digital through M&A, backed through a strong balance sheet. Game design and development investment to be modestly over historic levels of 11 to 12%, and user acquisition costs expected to be in the range of 25 to 28%. They're also trialling a cashless gambling technology with the New South Wales government to combat the gambling problem and money laundering activities, which should be a pretty positive thing overall, especially if they get the jump on other producers. I think the share price has been pretty well bid in recent times. So now we'll move on to TOR, Talk Metals. So may not be very familiar with this, so I'll just describe what this company does. It's a gold mining and mineral exploration company. Main assets is this Brownfields Paris Gold Project, which is 143 square kilometres of tenements, including 9 mine licences. It's got a JORC compliant indicated resource of about 32.7 KE ounces. Company also has the right to earn up to 80% interest in the adjacent Jindalee tenements by spending 200k in exploration over the next 3 years. Other projects include 572 square kilometre in the Southern Cross Goldfields at the Bullfinch project. The company will use a full spectrum of modern geophysical, geochemical and drilling technologies to tease out high-grade gold that old-timers may have missed in the at Bullfinch. It's expected to be 932k ounces of respectable average grade. The industry outlook. The Australian gold industry is enjoying pretty favourable market conditions at the moment. Elevated gold prices, an upward trend continue possibly through to 2024, as long as inflation expectations are rising and interest rates remain low. Obviously, that's a lot of caveats there. However, look, I think 1800 is usually a key price in the US dollars for gold overall, and we have spent a little bit of time above 1900 this week. It has pulled back a little bit, but if anything, I find that quite constructive overall. We don't just want radical spikes to the upside. Slow and steady will, long term win the race there with those sorts of things. Gold initially was worried about, obviously, the rise in interest rates. When we started talking about inflation back in February, it actually took a bit of a hit. So now with inflation actually feeding through to the market, but the central bank's holding strong on tapering for now and raising rates, we are seeing a little bit of more. A few more people join the chorus of saying that we should be reducing tapering or expediting the timeline. So look, interest rates going higher is going to affect the gold price. But overall, if we consolidate around here and continue to $2,000, these sorts of mining exploration things, are going to be very, very much in favour. So it's an IPO offer coming up for this thing, and minimum offer of 25 million shares, maximum offer of 35 million, issue price of 20 cents to raise a minimum of 5 million or a maximum of 7 million before costs. And the funds will be used for exploration on the projects, costs of IPO and general working capital. The modern geophysical, geochemical and drilling technologies are increasingly getting better. We've obviously got a current recommendation out on Codan who does a lot of the stuff like that as well. It's going quite well. Yeah. Next, we're going to move on to Arcadia Minerals. Same sort of thing. It's the exploration company is quite interested in 4 projects. in Namibia, including in order of development Swanson, which is tantalum and lithium, kumkum, which is nickel, copper, and platinum group elements, Caribib, which is gold and copper, and Bitawasa, which is lithium in brines, lithium in clays. So all fairly hot, commodities there. Very much playing into that EV, that battery sector. So the battery metals, expect to benefit from the booming electric vehicle sector. Climate change issues, global demand for stainless steel infrastructure projects, turning battery technology into one of the fastest growing areas. Current elevated prices for these metals, though. So, look, obviously, we get a significant pullback in any of those prices, which is statistically, fairly unlikely at this stage, given structural shortages in a lot of these commodities, particularly something like copper. But obviously, if those commodity prices pull back, it makes projects like these less viable. But at the moment, I think they probably have a very, very decent buffer. The IPO offers minimum to raise, about 5.9 million, maximum of 6.4 before costs, through an issue of CDIs at an issue price of 20 cents per CDI. Funds are going to be used for ongoing drilling, geophysics, geochemistry, feasibility studies, working capital, and the cost of the IPO. As with most of these sorts of exploration things, I've heard, which I very much agree with, is that you probably don't want to be putting all your eggs in one basket with these sorts of things. You're probably better off putting small amounts into a number of them. So because eventually, if one of them goes well, so probably 1 in 5 to 1 in 10 of these things is going to go really well, because exploration is obviously a bit of a patchy game in terms of your return on your capital. So it's one of those ones you'd obviously treat with care, and if one of them comes off, it'll pay for the others, sort of thing. So just definitely probably speak to your advisor about a strategy with these sorts of offerings. And whilst it's a great story to pick yourself up a 10-bagger, obviously they're the percentage chance of that happening is fairly minimal. So instead of relying on luck, maybe have a bit of a solid strategy on those sorts of things and spread yourself across a few, and diversify, so you increase your chances of picking the one that's going to work the best, and reduce your risks, because if they don't find anything, quite often they can, you can pretty much lose a significant chunk of your capital that you've invested in those. So, as I said, have a chat with your advisor about coming up with a decent plan on those sorts of trades, because while they're a great story if you jag one, there's a lot of, you probably spend a lot of money trying to get to that point. So. Right, we're going to look ahead now. Key Australian and US data. Next Tuesday, we got the RBA. Basically, nothing's going to happen there. They're looking at July, making the major discussions. Jokingly, some of my colleagues in the fixed income market have just said they probably should just even cancel this one and just wait till July. Pretty much they've said that they're not making any decisions until that meeting. So realistically, I can't see, it's like a 1% chance anything comes out of that one. So next Wednesday we got US ISM manufacturing data. It's a leading indicator of economic health. They'll be looking at the cost input side and the inflation part, I would suspect. And maybe some knock-on effects from that chip shortage. These sorts of numbers will be pretty closely watched at the moment. We've got PCE tonight, which is the Fed's favoured inflation number. So if we get an inflationary number this evening, and then ISM gives some more confirmation, we might start to see a little bit of a tremor in that growth sector of the equities market. So possibly best to be still sort of playing to that value sector at the moment. Next Wednesday, 11:30 in Australia, is our quarterly GDP. It is backward looking, but we don't release monthly figures, so it'll be quite important. The Victorian lockdown is going to obviously maybe make this figure less relevant because we're still having weird border closures because of Western Australia and Queensland's dedication to their election campaign of locking down. Really playing into the hearts and parochial hearts of their constituents, which is probably not really helping the economy overall. New South Wales really being the only sensible state at this stage, but I guess if you campaign on a platform of lockdowns, well, I suppose you've got to follow through when it happens, no matter how it damages the economy. But that's another half an hour discussion again. Look, it will be very important. I dare say because of the removal of JobKeeper, etc. People will be interested in the numbers. I dare say there'll be a fair bit of talk about the labour shortages and things like that to see if it's holding back capacity. And look, I dare say it's not going to significantly change any timelines. I think they want to see a string of numbers, the RBA, and they're mainly focusing on inflation, obviously, at the moment as well. It will be interesting to see with this Melbourne lockdown. Obviously, this is a lockdown without JobKeeper, which obviously we should be very critical of because there's no safety net. It'll be interesting to see how quickly they reduce that. Just one small interesting tidbit off topic is the travel companies actually have not been reacting to these lockdown announcements anymore. So that news fatigue's really confirmed there now. I think Webjet was actually up on the day when they announced the lockdown. So we have started to see those travel stocks find a bit of a base as well. So that's just off topic, but there's a definite change in price action there for that small sector. Thank you for attending Macro Minutes, and we will chat again next week.